Hello, it is Friday. It is also the 7th of September 2012. This will be a silver update. But before we get into silver, let's take a look at gold on the daily time frame. And I was stating yesterday that 1685 was not acting like it normally does within this resistance area. And the significant part about this 61.8% Fibonacci retracement is if you can hold and stay above it with really a clear break above it as well for more than a few days, then it's looking more and more as if this is going to be that of a failed move. The selling, of course, from February of this year to the start of summer of this year, and it's looking more and more as if that's going to be the case. When you also have a confirmation break above this, then it's looking very clear as if you are going to have a test of the previous high at 1791. If you're looking for entry positions, I know sometimes the more easier or the better way for risk reward is to wait for a little pullback out maybe down to the 1700 even mark, or even 1685, an area that was resistance, is now going to be an area for a good shot of support if, of course, it decides to even correct. It can still keep on building green candles and having these little sideways corrections along the way until it gets to that 1790 level, but obviously very difficult to point out. And let's move on now to the daily chart for silver, or for gold today. It's up 2.25%, which is very, very good. Silver's still up more, but not much more. Silver's up 2.8%, so the gold to silver ratio still going down, but not too much when silver is barely outperforming it. A lot of people will say that this market has got to sell off because it's up too much, and to a point they are correct, and the reason why it's only to a point is because does it have to sell off now, or does it have to sell off in the mid 33s or high 33s? There's multiple Fibonacci reasons why 33.5 would be a key resistance level, which we'll go over. And that's why I was stating when we hit the 32.66 mark that I felt it would at least have that pierce above it because of it. We'll look at two reasons why 33.5 are big, big levels. I also like this 18 average, front-weighted average of the band's high, lows, and closes to determine correctionary phases. This correction in here, and it's still a correction, just little small sideways movements. It needed maybe a couple more days to get within the band going sideways, but it didn't. It really didn't correct that much of a percentage, but it still counts as that of a correction. Let's move this on now. Let's go on to the weekly chart. And there's one of the two 33.5 levels that are really, really important. It's the 38.2% Fibonacci retracement from the 49.81 highs and the 3 times hit bottom of a little over 26. And now we get to this level. I consider this then what or a now what situation. What's going to occur? Is this area going to be resistance? And if that's the case, is it going to successfully create a higher low? The higher low that you would look for at the lowest would bring us to this 18 band. Any pullbacks really down to, from this point here, 30, we can see is healthy. Will this area be resistance? Because if it's not, are we going to find support rather than resistance at this level? And if this keeps going, then the next upward test on this is roughly in or around the 39 level. As far as the trend line is concerned, it has been breached and taken out. We're going to take a look at this on the logarithmic point of view. And when you do this, that means 2 following hits match perfect, or at least you're always going to match the first 2 marks perfect, but the third one hit another perfect resistance point. Now it's broken above it at the end of last week. This week is a clear breakout above that line. It could also be an area where support may be had on further pullbacks. Now let's move this on from the really the 5-day chart, weekly chart, to the 6-day chart. And the reason why I'm going with 6 is because I wanted to show the breakout of the 1774 lows that occurred the final week of August in 2010. This is 1774 right here. That was the breakout low that occurred. And it's actually very common when you see that you have a breakout, that you have this little pierce below. Maybe it makes a lower low from the previous period, which it did, and then it breaks out, trying to get the shake some people out before the big move comes into play. Okay, so the Fibonacci takes us from 49.81 to 17.74, and it's been playing out majorly perfect for the most part. As you had double support in here, more often you test support, or resistance, the more likely it takes it out. There's your takeout phase, and then you find support, resistance, support, resistance, support, resistance. Well, this is now test number 3 of the 33.58 level, which is pretty much the same as 33.41, 42, whatever that number was. So 33.5 as a big level for, of course, this this rally to be that of a failed move. It needs to break, hold, and stay below this 26 1/3 area. It's only broken that area by a percent when it went to 26.10 area. That's about it. Really nothing at all. You can say that it is a perfect hit. Holding and staying above here puts this market back into its bull market, something that it lost when it broke down in September of last year. So those are the two significant 33 levels. So it's not easy for me to state that it's going to break through it or if we're going to make a higher low, but making a higher low really into the 30 level, even a little bit higher than that, and then making a move up to here is a very bullish scenario. Finally, let's take a look at silver on the 15-day report, mainly just to show the 2008 lows, but no, not really. It's because it's been 15 days now since the market's been breaking out, and this started 15 trading days ago. Breaking above this 18 average, which is 18 times 15 days, of course, or that of a 270-day average. I don't think too many people use it, but I'm using it now. Again, you can see that we have a clear breakout of this trend line, and that it managed to correct at a pierce above this 38.2% barrier. So we're in a bull market. A lot of people were freaking out that this thing was rolling over, even though it stayed bullish for the most part. Obviously, breaking below the 18 average. If it does stay above it, then this does show a possible failed breakdown. And again, people were saying back when it originally crashed, "Oh, I'm out, I'm out, I'm out." Were they right? Were they wrong? And that all depends on what they did after they got out. For if you did get out at 33, 35, even 37, and you reloaded back in the market, then it worked out to be that of a great play. If you switched to another investment that made positive gains, again, you made a good play. But if obviously you sell here and you're wanting to protect yourself from the fiat currency, and then it's going back higher, then would that be considered that of a great play? After all, there's a lot of people, including myself, that bought down in here, and they held. They've seen this thing go all the way down, breaking below 10, and here they are today, up in the green because they didn't get shaken out within these moves. Something that Mike Maloney has written in his book, A Guide to Buying Gold and Silver. I think you do a YouTube search, a Google search for Mike Maloney Gold and Silver book, and you should be able to find it. Very good book. Okay, so that will be it for today. I'm thinking this weekend I'm going to just do a review video of the entire summer, and I will be back to business for the week next week. Take care.